it's a really, really good crowd. And before, we deep into the round of introductions, I would like to ask you guys, who is in the audience involved in the blockchain space? Perfect. And who does hold any cryptocurrencies? Wow, we have a really good crowd. Okay, let's start with a round of introduction. Please introduce yourself, your project, and what got you into the space.
Sure. My name is Alec Fedosseev. I'm one of portfolio companies of Times Group that just was mentioned. My company, One World Online, is a blockchain-based combination of marketing and research, which is doing very organic, interactive experiences. And we have conversion rates 5x better than Google. We in blockchain space since early 2016, before the hype. We did our ICO and issued our tokens in 2017. And all of 2018, we supported a lot of other companies doing the initial coin offering, now security token offering, tokenization of enterprises. So very much living in the space every day.
Great.
Yep. Hey, everybody. Is this on? Yep. So I'm Stephen Brett, founder and CEO of InMusik. So InMusik is a platform that allows fans to actually invest in artists, up-and-coming artists, and then they get a rev share based on their success. So we started doing an ICO, and I think we got in a little later than you guys. We ended up deciding to pull back out of that and raise capital in the traditional sense, but still using blockchain technology as the underlying piece to our business.
Hi everyone, my name is Sahil, and I'm one of the co-founders of Harmony. Harmony is trying to solve one of the most important and complicated problems we're all aware of in this space, which is around scalability and privacy. So Harmony is trying to create a public blockchain platform which can actually scale to millions of transactions per second, which means that tomorrow we all want to see decentralized future, or we all want to see not the Googles and Amazons of the world be these rent-seeking companies. All due respect to these companies, we want to see decentralized marketplaces, and a platform which can make it happen is what we envision to build. Have a great team working on it, based out of Cupertino. We have not done a public ICO. We've done private fundraising round and are looking to get feedback on what you think about fundraising and ICO. So happy to share our 2 cents on it too.
Perfect. We have 3 completely different use cases. I love that. Let's start with the ICOs, though. Let's just speak about all this craze that happened last year. So the ICOs raised $12 billion, all during the 2018. However, this stream significantly slowed down by the Q3, and by the end of the year, it was almost no ICOs. So, and my questions to the panelists, what do you think? Are the ICOs dead completely, or they will come back in a form of security token offerings?
I can start. I don't think tokenization is dead. We just need to change the terminology. Because ICO now has a negative connotation. It doesn't mean that the digitizing assets is gone. It's just reformatting. So Wright technology, which is DLT and blockchain, it will be applied to a different use case. So instead of doing wild utility tokens with no real meaning sometimes, people are going to tokenize true assets, anything from equity to real estate to IP to other various assets. And it's going to be labeled either a security token offering or just digital tokenization, which is a more generic term. And there's no any winter, by the way. There's if you look at the trading and the price of Bitcoin and other assets, yes, there's definitely a big correction going on. But if you look at other metrics, like number of blockchain developers, the number of projects, according to PwC, 84% of companies are preparing to do something with the blockchain or tokenization, 84. And there's a big shift, of course, to security tokens. So it's the king is dead, long live the king, right? That's essentially what's going on.
I think from my point of view, while I agree, I think tokenization is not dead. I think the idea of raising capital through an ICO is significantly changing. In fact, I think that part is probably dead. Whether it'll become an STO, I'm not even so sure about that just now. I think what's probably going to happen is as we start to see some of these companies that have done an ICO start delivering real value and providing, say, like building a product that's actually working, getting users on there, getting people onto the blockchain and using it, then as somebody who is kind of watching this on and as a founder and sees, okay, it's working, I think that's when we'll see another form of an ICO start to become another bubble. But I think for the next year, maybe 2 years, I can't see very many companies successfully funding through an ICO.
I think before I give any of my commentary, I feel whatever I say or most of us say today is going to be outdated a year from now, which is fantastic for this industry. So I want to say that ICOs, when they started, were an innovation around crowdfunding and something which had no rules. And now we're coming to an era where we want to actually handcuff and define those rules before we move forward and play a serious game, like you said. So I feel like there will be some interesting way ICOs will evolve. Regulation obviously has a huge role to play in how we protect consumer rights and how financial capital markets have worked for so long. So I think those kind of rules have to be changed. To the second part of your question around STOs, security token offerings, I think it's a very novel approach to tokenize real world assets. The question is, when do we feel there's going to be critical mass of demand? I don't think today we're trying to securitize or tokenize some of these securities or assets, but is there demand? I think those people who can actually figure out where there's demand will be rewarded, and I really look forward to such use cases.
Perfect. I would definitely agree with some of you who is saying that security token offerings not necessarily will, penetrate 2019, just because there are so many other things to figure out, like regulation. And what ICO progressed on is the big number of retail investors who got burned and the teams that got burned. So really tough to predict. Agree with you, Sahil, that it can all change in 6 months, but for now, the situation is quite interesting. So no one STOs on my side. How about you, Alex?
I can say that security tokens are definitely not the only choice today. Many of you probably know Malta is a blockchain island that is developing their own infrastructure. And they have a concept of VFA, virtual financial asset, which is not security token by no means. It's a utility token, as we called it before, but can be traded on exchanges. And it has to be certified through its issuance and should be compliant in certain ways, not too extreme, but to some level. And many other offers, what I call hybrid offers, by the way. We're going to talk about this. A lot of companies raising money still, right, by offering both equity in the company and some tokens that can be used inside of the application. I think that's a model that's going to survive. So it's not just one or just another. It's a very, you're right, changing landscape that is very exciting because we're living this life together. But the good news is that the technology that underneath is definitely proven. And the idea of raising money using this technology is kind of tested. Maybe first test wasn't that successful, partially successful. But the second role, and it's very much like .com era, right? The first wave of companies is going to die, but there's going to be great companies growing on this, field full with bones, right? And the next generation is going to be much better than the first one. We'll see new Facebook, new Google, new LinkedIn, all these monsters going to be replaced. 100% of them with companies of next generation.
And I totally would agree with that. I think it is a hybrid that's going to emerge. But what I loved about the ICO model, or the kind of that era, was the ability to allow a retail investor to get and participate with early stage companies. I think that was changing the game, and it's obvious that there's a demand for that. I think people want to be involved there, but if they got burned, it's going to be, it's once bitten, twice shy. It's part of the reason. I think some of the things that are happening right now, that explains some of that too. But yeah, I think it's going to be a hybrid, and I think it's when you can put some sort of other value. Maybe it's the equity piece that is connected to a token. That's where things get very, very interesting. And so yeah.
Yeah, I think one thing that I've really been banging my head against the wall for the past 6 months has been, we want to tokenize things, but we don't know how some of these hybrid models work from an economics point of view. One of the most under kind of researched and probably we don't have enough benchmarks for crypto economics. How do these monetary policies work when you actually tokenize something and create like such crazy liquidity, right? And you have inflation rate of tokens. How do you, even if there are dual token structures, how is the interaction between someone who's holding a utility token versus someone who's holding it as an asset? And where does value accrue over time? And I think these are interesting questions we need to solve before we say, hey, these models can work together. Because some of the platforms, projects don't know exactly how the economics work. I think the basic fundamentals of exchanging value, transacting, aligning interest comes with these basic fundamental economics models, right? And I think that area, even top projects like Ethereum don't have clear answers for. So I think that is super important from a tokenization, raising capital, thinking about monetary policy of that particular ecosystem point of view as well. So I would probably want to really see more research or more actually projects coming out with answers on these fronts.
Great. Steve, you touched upon the fundraising and venture capital, and I really would like to elaborate on that, because as we see right now, everything defaulted back to Silicon Valley. Before, we've seen so many Asian crypto funds just emerging in the space. Throughout 2018, we've seen 300 new funds that suddenly started, to emerge in the space, got a lot of money, got a lot of investors. However, they all seem to have some struggles, and some of them didn't really make any investment from August last year. However, on the positive side, we do see the venture capital and traditional VCs in the Valley are very excited about the blockchain tech, see the long-term potential. So in the case that we are going to more traditional rounds, equity plus like some hybrid models or some equity, how do you guys think it will change the landscape of the industry?
Well, I think, so I was in China not too long ago, and we met with some of the guys from Tsinghua University who are kind of leading a lot of the space in blockchain and have some very interesting thoughts on this. So there's this real kind of, there's an in-between at the moment from their perspective. What they kind of like the idea of is having a traditional equity round, but allowing, say, retail investors to participate via a token. So that token then can be purchased in kind of same way as an ICO, but it doesn't just represent a token; it actually represents a piece of equity for the company. So, and we, from chatting to investors as well, just exploring the space, we were fortunate that we didn't need to. We weren't like we weren't going to fail if we didn't raise any capital because we were okay self-funded. But as we were chatting to investors, a lot of them were saying, well, look, if we invested in the traditional, say, a convertible note or did a series seed, for example, can we include tokens as well? So they wanted to understand that if there was an option for early liquidity, which I think is a very, every investor has it at the top of their mind, that's something they wanted to explore. So there was new models being created where it was a convertible note, potentially, with a conversion to part equity, part tokens, or a piece of a token that represented equity. So that at a later stage, if it went on an exchange, they would be able to exit their position if they felt that that was the right time for them. So these are the hybrid things I think are coming about. And I guess it's going to be incredibly interesting to see what happens in the next 12 months around this space and what innovators create, new legal ways to kind of navigate the space.
Great. Alex, do you want to add anything on the hybrid models?
Yeah,
if
of
not,
course, yeah, what Steve just said, actually, it's so applicable. I have about 12 companies that my clients, they do fundraising.
You guys agree with each other
No,
all the time.
I have an example right here, a great mobile advertising company called ZipMe. And what you just described, exactly their model. They have convertible notes to raise equity. They offer access to tokens for early liquidity, which a lot of investors really appreciate. And they seem to be getting good traction because people love this combination, right? So that's happening. And just one regional comment, because last year I spent 4 months on the road doing this tour with my client companies together and doing demo days in all parts of the world that have anything to do with crypto. So it's Singapore, Hong Kong, Bali even, of course London, Zurich, and Malta, in San Francisco, New York. And it was really interesting to see the similarities and differences between the regions. I think the Asian investors are actually preparing for the big jump. There's no doubt about this whatsoever in my mind. We're talking to people advising Chinese banks and Hong Kong and Singaporean banks. Everybody's super excited about the security tokens, but they also kind of understand that there should be different classes and different rules. So between Singapore and Switzerland, they have a working group. I was actually part of a couple of their meetings, and it's amazing what they're doing. They're developing kind of guidelines that can be leveraged for all players in the space outside of US and China. US and China are two exceptions, right? The rules don't apply there. Maybe India is also a very special case, But the countries that actually already are on the bright side of blockchain, they coordinate in these activities. They want to classify tokens the right way, offer regulations and taxation, which is a big problem in the US, as you all know. We don't have an exempt for crypto to crypto transactions still. We live in by rules of 1933. This is not cool at all. But Asia is definitely preparing for the big jump. Europeans a bit behind, but Switzerland is leading, and they do work on this new framework, which is almost there. You probably know some cool companies like Smart Valor. They're going to introduce a whole new platform, very much like backed in the US. They're doing similar things in Switzerland. So the landscape is becoming more favorable for both fundraising and deployment of tokens after they issued. I think it's shaping. It's shaping very fast, and we just need to go with innovation. I think that's the answer, including fundraising. It's still valid.
I do think that there's a white elephant in the room. I think I do agree about the ways to structure equity and token and hybrid models, but honestly, no one knows how to do valuations in this space. Like, why do VCs also did not invest because they had no idea how to value a company or how to value a market of all these things like protocols or layer 1, layer 2 solutions. And suddenly when they want to go into equity deals, a company might have raised tokens. The coin market cap exchange would actually value the company at, let's say, $1 billion, and VCs are now saying, hey, you're a $20 million value equity value company. So do you want me to participate or not? So I think that is also one interesting development in the space, that we haven't seen a way to value such blockchain projects or companies. I think a lot of it is also this hype created by some VCs who invested in the first round. I think some of my VC friends are going to give me some looks here. I was also an ex-VC for a while. But I think that valuation piece is interesting. We need to think harder about that so that we make and also not just for venture capital, but also for retail investors. They should not be the ones getting their hands burnt all the time, like every time, let's look at history, right? So I think those are interesting things that we, again, need to solve, even though we can figure out with the help of lawyers how to create these new SAFTIs or hybrid agreements. But what about valuation? We don't know yet how to value some of these things.
Thank you so much. I like, Sahil, that you're bringing up all the fundamental questions. And this week been very interesting in crypto space. We just got 2 M&A deals executed just this week. We are on Thursday. So 2 crypto companies got acquired by Facebook and Kraken. And with that, I would like to ask you guys, what's your desired exit out of the companies that you're working on?
I can start. You probably know last year there was a lot of consolidation going on in exchanges space, right? Not only big guys buying small guys, but quite a few. For example, wallet purchase. Binance bought my sister company called Trust, for example. That was very exciting. They started ICO, and a few weeks later, Binance noticed them. So, oh, yeah, that looks good. And they got acquired in a few weeks. So this year, I believe there's going to be a consolidation of tools, because tokenization process right now is too disjointed. There's a lot of closed, fragmented systems. And the company running ICO, STO doesn't know where to start, where to finish, how to go from phase to phase, when they're ready for campaign, not ready, how to retail, what regulation offer to create. So this is going to be consolidated probably among a few players into turnkey solutions. And that's where I see a lot of potential for acquisition of companies like us, because we do everything marketing for token economies, and we want to become part of a bigger solution which covers the whole cycle of tokenization, from planning to post-ICO marketing or post-STO.
I think it's a great question, because if you think about blockchain in its purest sense, there should be no acquisition, because it should be true consensus amongst the user base. And if tokens represent the ownership of the company, which they really should, then therefore one person doesn't own it. They own a majority of tokens potentially, but they don't own the company. So selling that on, I mean, of course you can do that. There's various different structures. But if you're asking us personally, you know, I guess from being a musician and being in the music industry for a long time, very passionate about that. Acquisition is not something we've kind of targeted early on. It's something that it could potentially happen, but you know, we'd really like to build this business and to grow it out, because we do see that the fan investors who get behind artists, they're the real owners. And so we just become a kind of a leading team for it. So it differs from every company, and I guess it depends on, you know, agenda, but also, you know, whether it's a purist blockchain company or whether it's a it has the potential for an acquisition. So I guess it varies.
I think it sounds crazy, but when we, all of us at Harmony joined, it was like go big or go home. So for us, the exit is like anything which we use today has an underlying platform. And if we truly believe in the power of blockchain, we want Harmony without any of you knowing that somewhere you're actually interacting with the underlying blockchain technology, my smartphone or the apps that I use. The apps need a trustless network for any kind of transactions to happen, and that powered by Harmony is what our exit looks like. So I think that adoption of our platform across the world without any particular problems is really like what we want to do. So that's why I said it sounds crazy, but that's the real exit that we want.
That's great. And we can probably see some consolidation happening in the space. But let's talk a bit about Bitman IPO, because it's very, very interesting. So the Bitman company, the biggest Chinese miner, filed for IPO, however, have a lot of struggles going through the process, and Hong Kong Stock Exchange didn't really approve the IPO yet, and probably would not approve it whatsoever. So what do you make of that? And do blockchain companies supposed to go IPO? So what's your opinion? Apart from protocols, let's keep the protocols aside.
I mean, I can get started. So I think Bitmain is a very unique company which has done a whole lot of good for the industry. It's not a blockchain company, it's a hardware company which helps the blockchain industry move forward. So it should be treated like any other traditional tech company or any other company which wants to do IPO. I have also a few friends who work there, and I think there's hats off to the move fast, break things, Facebook kind of culture that, hey, let's make sure that we can fill the world and everyone can mine these cryptocurrencies, so that's great. But I think there's a lot of speculation of why the IPO did not happen. My pragmatic thinking says that any company needs to go public, you need to have the fundamentals right. Your future cash flows should be promising, they should show growth so that people buy into the stock of a company, right? And maybe with the space being so volatile right now, we don't know if how far proof of work and mining is going to go. Is mining going to be profitable? What if Bitmain's only business model is from the mining hardware they sell? Can they sustain if suddenly the industry changes in 2-3 years? And these are like tough questions. And when you're thinking about corporate governance, you have to have answers. So I feel like I'm not surprised the space is so volatile, but doesn't take away from all the good work they've done so far.
I think you've hit the nail on the head. I can't comment more than that.
Yeah, and that's a different type of company. It's not really decentralized or blockchain, true blockchain. It's just operations company, right? But now back to a question about IPO, ICO. Some companies do both. You probably know examples. Naga in Germany did that a while ago. There's some other companies, Bitfury, it's not a miner. They just did a big fundraising, and it feels like they go to IPO, and it's not going to be one or another. And the landscape is so complicated now because you're right. You look at valuation on the equity side, you look at valuation on coin market cap. It's not really clear how they correlate to each other. They're actually not correlated to each other most of the time. And so there's no clear guidance about the evaluation of the companies and options they have. So we'll have a lot of one-off type of cases first before we get some consistency in the industry about how to treat this type of deals, right? Fundraising and exits and everything in between. But it's shaping up. It's like a dot-com era, pretty much, right? It's Wild West, and the rules are developing as we go.
So with that, let's open up the floor for the questions. Thank you.
Can you address the independent exchange offerings, IEOs? What do you think of those? Like BitTorrent, for example.
Could you please repeat the question?
Independent exchange offerings, what do you think of those? There as fundraising opportunities, yeah.
Yeah, independent exchange offerings, right? So I have probably heard it from a friend where exchanges actually take you public and you can list directly on an exchange and raise funds. I haven't formed an opinion yet. but I feel it's one of those innovations which are going on. I don't know what the outcome's going to be. Seems like a lot of information asymmetry with that. So I'm not sure. It's a cool marketing move. I don't know if it's going to work.
Yeah, it's a new one for me. It's something to Google when I get back. So yeah, no. Okay.
Hi. Do you guys have a product already? And if so, how many users do you guys have?
Well, I can start with ours. So before we kind of pivoted into what we're doing right now, we had more than 1 million users. And so we have, at this moment, we're about to launch in India in about 3 to 4 weeks. So the product is pretty much built. And we're just onboarding and doing due diligence on a whole range of different artists in India. In the US, we're in the process of getting regulated for being a funding portal. And we have a range of pretty decent sized names doing raises via our platform, reaching out to their fans and getting them, backing them. And so I said about 1 million users, but realistically, when we do the conversion and kind of get them onto the new platform, if we got maybe 20-25% of them active again, I think we'd be doing well. So that's us.
Yeah, so if you're a developer, we have a DevNet, which is a developer network live. It's been live since 15th of December. In the next 4 weeks, we're going to ship testnet, where you can also mine and actually take a glimpse of how you can be a validator on the blockchain protocol. It's a base protocol. So those are the two things which we're excited about. We just open source our code, which means we're one of the cool open source projects, and hopefully mainnet in the next less than 6 months.
Yeah, and OneWorld is running since 2014, so we were already mature product on the market when we did our ICO. It was not starting from scratch. We already had this tens of millions of people that engaged and voting and using our platform, and more than 3,000 publishers and advertisers on the other side. So demand and supply. And so token economy just helps to increase loyalty, because people now are getting some incentives, not just virtual points, but actual tokens that are a cryptocurrency. But yeah, we have one of examples for the working economy.
So I think we have time for one last question. Oh, in the back there.
Thank you all. Great panel. So I think Sahil mentioned something about an elephant in the room that needed to be addressed, and I'm wondering if there's maybe another elephant in the greater Silicon Valley area that also needs to be addressed, or maybe it's a lack thereof, this elephant, which is the elephant of ethics, right? And I think that all of us that are involved in the blockchain space came into it because of the promise of a better future, of a decentralized future that maybe can avert some of the problems that some of the behemoths are running into, whether or not you stand on one side of that argument or another. But I'm curious to hear, what are each of your drives for being in the blockchain space? What got you into it? What's your passion? Why do you love it?
I can start because I'm very ideological about what I'm doing, because I think today people don't own their data. There's no correct relationship in the privacy space. And the fact that, for example, in Facebook, we're not users, we're products, right? I mean, everybody's saying that, but I feel it very strongly across the board. For Google, we are product. For Facebook, we are product. Nobody, all these data leaks and all other horrible things happening, we have no control whatsoever. I think the promise of blockchain, number one, is to have blockchain-based ID on the internet, which is not coming from one company, right? There's a consensus or combination of technologies that are going to work together, and there are quite a few great companies developing it. I think that's one thing that we all should care about, get our identity back and get internet back to people. Because right now, we're just products on the internet. We don't own nothing, right? And second thing is back to decentralization point. I think a lot of business models should be changed. So reduce the middleman. I really admire Travis and Uber. I think they created tremendous example to follow when they created a market space where everybody benefits on both sides. So blockchain continues this trend to even bigger and better picture of the world. There's more, of course.
So for me personally, I came from the fintech world, and specifically so many problems that are still unsolved on the emerging markets, and that's just there hasn't been any progress over last 10 years, even in payments, which is very obvious use case scenario, right? So blockchain space has a promise to solve these problems really fast. And another thing is governance, because we are very inefficient on how we govern stuff. Democracy is not really holding the big promise, and there are so many questions that we need as a society open up for the future generations, and we require global cooperation. It's technological disruption, it's climate change, and we do not really have good governance models, and without countries and leadership cooperating or society cooperating, we won't be able to just, even save ourselves probably in the future. So blockchain has this efficient mechanisms that could help to resolve that, and that's why I'm in the space.
For me and for us, it was, I've always seen fans, and being a musician, fans are probably the most important piece of the music industry, and they're the most undervalued piece of the music industry. And I kind of felt that, well, look, anytime value is being added, there should be a reward based on a measurable value that person or that entity or whatever it is that does. So tokenization seemed like a really great way to solve that, and that's why we went into it. It wasn't actually to start this kind of investment platform. It was actually just to reward fans for their participation in helping the success of an artist. And that then evolved because we realized that wasn't really a utility token, it evolved into a security token, which evolved into being, well, why doesn't it just become an investment? So we can reward people for participation, but actually reward people in a much more kind of measurable way for their actual financial contribution. And so tokenization works really well for that, because especially for retail investors, with blockchain and inherent trust, it just makes it really clean and simple. But as I mentioned, we had to pull out because we couldn't do it because the regulations wouldn't allow us to do it right now. So once I think the SDOs start getting approved and we understand what's working, we can then go back and remeasure against that. And while we use blockchain for now, I think the tokenization piece of it will come in at a later stage. So but that's why we got into it. It was with ethics in mind, actually.
I think disclaimer that I'm not a pessimist, or I'm not a pessimistic person, first of all. In fact, I'm a pretty scaringly big optimist. I think the white elephant, in my opinion, when I thought about getting to this space, not just in this room, but for the world, is there's a lack of trust and fairness. I mean, who do we trust? Governments? And I'm not trying to create this propaganda here. Let's stay away from that, okay? But when we think about big organizations, some of us have these feelings or thoughts, and they may be different for different kind of organizations, right? You might trust Apple, someone might trust Google. Sorry for taking a dig at only these two, but it's generally prevailing. And I felt like, hey, there needs to be some system which can create or make us feel that there is some trust and fair system. And I think this is a very philosophical line in the argument, but the economics line was, hey, these companies create value, and then they're supposed to capture value. That's the whole premise of running a corporate or a corporation, right? Where you have to capture some value and create value for shareholders. But there's a big problem in the incentives that are aligned for who gets to keep the most value. And I think with a system like blockchain, you can actually align the incentives and make sure that there's no one person who's creating and then capturing the most value. You can actually align people based on the value they're creating overall. And I felt like that was brilliant, and that's messed up. We need to find ways, and we are far, far away still from that. But decentralized systems, or like you said, fans create you, and they should also be able to capture value. So I think that fundamental economic argument also is pretty sound for this technology, and kind of made sense.
Thank you.
Well, thank you so much for our first panel.
Thank you, guys.
For our next conversation, we're really excited to welcome Jiang to the stage. He works in business development and partnerships at Harmony, which is one of the companies you just heard from, and is actually a former member of the GSV Capital and GSV Asset Management team. So it's great to have Lee back here to continue the conversation beyond the theory and the infrastructure and the investment landscape of blockchain into the actual real business use cases that are making their way onto the market, and ideally disrupting some of these industries that everyone says are so inequitable and unfair and ripe for change. With that, I'd love to throw it over to Lee.
Cool. All right. I found a chair. So why don't the panelists just come up and we'll start talking. But I want to thank the GSVlabs team. Let's give them a round of applause for all the hard work they do behind the scenes. And I'm going to take this opportunity. I think you guys deserve a picture for coming out here tonight. And in the midst of this crypto winter, and really thinking about some of the issues in building. So our panel is about use case and adoption and users. And Michelle, you actually stole my thunder. You asked the question already. But if you guys just go to stateofthedapps.com, it shows you a ranking of all the decentralized applications in the world. And the one that's the most popular in the world currently is a dice game that has 33,000 daily active users. That is a tiny number compared to the $800 billion of money that crypto was worth at one point in 2017, 2018. So I want to ask each one of these panelists to really just give some, talk a little bit about what you do, your company, and give maybe something tangible that we can point to in terms of application use case, what you're seeing. Any numbers would be really awesome.
So I'm Jack Sabo. I'm going to be a little different than I think a lot of the companies up here in that we're not building a blockchain product or on the blockchain, but rather we're creating special economic zones in emerging markets, working with governments to create environments where the blockchain activity can really thrive. The thing that I've been a little disappointed in, and I'll go into disappointment, I guess, is the lack of adoption, but more on the company side, which is putting an emphasis on adoption. So many companies have been focused on building a product and trying to build everything at once instead of trying to go through the traditional startup methodology and really bring a product to market and work on that early use cases. So I apologize I don't have numbers to back it up, but I think on the state of the dApps, we'll start to see a lot of these companies start to fail and their numbers start to dwindle because they've not focused on their go-to-market strategies or the other things that really make a startup succeed.
Great.
Hi, I'm Bruce. I'm the co-founder of NKN. NKN stands for New Kind of Network. So we try to build a peer-to-peer networking that's actually being incentivized by tokens. So that's what we do. So in terms of the application, so concrete example, one example is if we both are here and one of you have a lousy cell phone connection and I can use the other person's better cell phone connection to transmit a large amount of data, and the other person who share actually can get some token reward. So that's kind of the basic idea, to tokenize the internet connectivity and the bandwidth. So in addition to that, I think another question we try to solve is how to solve the applications to send data from one person to another without involvement of a centralized server. So today, if you send out a WeChat or WhatsApp, so it always goes through a centralized server by Facebook called Tencent, right? So how can we enable direct transmission of data between person and securely and verifiably? And that's what we try to do. So our aim is really in the future, the application do not even need to worry what is actually blockchain underneath it. So they can use it as any other application. Yeah. Cool.
Great. Is this thing on? I don't think so. Hold on. Trade with you and you can muck with it for a little bit. So I'm Catherine Woneis. I'm the head of product for Cryptowerk. And Cryptowerk's vision is really to build trust into every single piece of data, every process, and every transaction. Think about it. Data is becoming more and more important, obviously, with the rise of IoT and machine learning and AI, analytics, and so forth. And one of the biggest problems that people aren't even necessarily aware of is how do I trust that data? How do I trust that that data from that sensor in a car or from that oil field or from any other piece has remained intact from that time that data is generated? And that's the problem that Cryptowerk is really designed to solve in our first product, Cryptowerk Seal. Basically what we do is we allow organizations to anchor hashes of their data, whether that's documents or sensor readings or anything else, into multiple blockchains at massive scale, without needing to manage wallets, without needing to worry about currency fluctuations, without needing to learn any special sort of programming languages, et cetera. We really measure our success in the volume of data that we're sealing, and we're well on our way to sealing 10 million pieces of data. So,
Awesome.
My name is Sam Hayes. I work for TangoTrade. And what we're doing is really B2B payments for SMBs, so small and medium businesses for less than 500 people. We're focused on imports and exports, which oddly enough, a third of all imports and exports into the United States are from SMBs. So it's a really an important group, but they're not particularly well served by the letter of credit product that the larger banks provide for that kind of payment assurance. And so I kind of represent, I think on this panel, an entrepreneur that has worked in that space before we had blockchain, and really have looked at a lot of the technologies around it. One of the use cases that's pretty compelling is that we work with freight forwarders and with cross-border payment providers and a host of other people that need to look at a bill of lading or ship manifests and things that have the kind of security behind them. And so we've looked at that technology, and really, I think blockchain provides promise there. But I also come kind of from the infrastructure background, which is a lot of that's based on standards, and a lot of that's based on the regulatory and the legal frameworks around that. And we've definitely found that those have been wanting, I guess. And I think there are lots of great consortium efforts to try to build that across different industries. But it's definitely developing. So I would say it's a mixed bag in terms of lots of promise, but there's still a lot that needs to be done to rely upon those technologies.
Yeah. So I guess my follow-up to what you just said, Sam, is why does it need to be on a decentralized ledger as opposed to just like digitizing it, or just having a consortium, or just having an industry standard? And probably the same question for all of you guys is like, how much of this problem is just more people and companies and trust within the industry, and how much of it is, do you truly need something that's like Bitcoin level of decentralization?
Yeah, I can go first on that. In general, I mean, I think there's been a good dialogue on permissioned, which is kind of the fancy word for that there is not this kind of proof of work, or there are different elements to that kind of approach. And in general, when you look at standards organizations and you look at bringing a number of parties together, I think that very often a permissioned kind of approach can work. There are benefits to some of the distributed ledger technology, DLT, blockchain, of immutability and different kinds of trust. But I do think you're right that a truly distributed apps kind of approach is kind of a unique one.
I think when you're talking about really building trust into things, you want to be able to spread it out among as many participants as possible, because that way you're not relying on a small set of people or organizations to go through and validate things. So in our case, for example, if a lot of people are looking at ways of securing data by putting data directly onto blockchains, large volumes of data directly onto blockchains. And one of the ways that people have tried to get around the entire notion of scalability and the problems that they have with putting it on public blockchains is to turn to the private blockchains. But it turns out that when you get 8 to 12 participants in anything, it becomes astonishingly easy for a very small number of those participants to warp the system and really make it so that you can't rely on that. So we believe very much in the decentralization of public blockchains, and in fact multiple public blockchains, just to be extra safe, to really guarantee that things aren't tampered with and aren't confused.
And sorry, who are you working with? Like what platforms are you building?
Yeah, so we support a wide variety of blockchains. We support Bitcoin and Ethereum. We also support Hashgraph, as well as we do support some private blockchains too. So Hyperledger, Multichain, and a variety of other ones too.
Not NKN yet? Can we?
Actually,
can Bruce convince
if a customer would like us to support NKN, it would just take us literally less than an hour, and we'd be able to support it. So
awesome.
Okay. Yeah, for NKN, actually, it's a natural fit, right? So if you think about the devices that need to send data from one to another, so in terms of humans, that's 6 billion. In terms of devices, I don't know how many billions, right? So enable those peer-to-peer transaction and connectivity. I think nothing else can actually scale, right, in a centralized manner. And also, I think the way we see it is to really disrupt the telecommunication industry, you need to kind of increase the supply. So today in the US, you have 3 or 4, and they're getting less and less carriers, right? But if you enable every little person and every little business in the corner can build up their own infrastructure by this token economies, you actually have many, many micro carriers, right? And then you have a very efficient and very competitive market. I think in the end, everybody will have better service. be it a cellular service or just fixed network connectivity.
As I think about the blockchain use cases, the blockchain is really good at solving issues where there's high cost, high friction, or low levels of trust. And if you're an institution looking at the use cases that are out there for your, whether it's supply chain management or X, Y, or Z, you need to make a decision of the trade-offs for which kind of platform you should use. I mean, these permission blockchains that are coming out are really good for institutions because they don't need anonymity, so they don't necessarily need a token associated with what they're doing. For us, the issue that we're trying to place into the blockchain is trust. A lot of times in emerging markets, people have a hard time trusting the institutions. One of the ones we're working with, 70% of their budget doesn't get to where it's supposed to go. So what we're able to do is remove the trust inherent in the institutions and place it in the technology so that it's there and available for all those that are working with it. AML, KYC is a place that we're starting with a lot of these governments so that they can look and point to these other international institutions and say, we're doing all that we can to take those steps to provide them as much trust to the user as we can.
So in crypto, we trust cryptography, not cryptocurrencies. But actually, I wanted to ask you guys, so one of the questions I've been thinking a lot about is how do you get big enterprise customers to adopt your solutions and actually trust that you as a new company, a new startup, is building a platform that's robust for the Fortune 100 companies to use and to plug in?
Well, I think for us particularly, we all came from an enterprise background. So we all definitely understand the importance of things like interoperability and availability, trying to be neutral about things and so forth as well. So when we designed our solution, we designed it to, A, allow you to not necessarily just have to trust us, but to be able to utilize multiple different blockchains and multiple different distributed ledgers so that even if one or more of them was somehow circumspect, you would still be able to guarantee your information. The other thing that we built into the system is that you don't need us in order to verify any of it. So even though so basically what you do is you keep your documents or your data behind your firewall, you hash that information. You only send us the hashes, so we never see your data. We then take those hashes, super hash them, put them into multiple blockchains, and give you back a seal and the information that it was sealed into those blockchains. At that point, you don't need us anymore. You can validate those hashes through our API service if you want, but you can also go to each of the individual blockchains and validate that directly with them too. So by taking us as much out of the equation as possible, we believe that that will help to build and has helped build enterprise trust in us.
I think that's a good point, which is, my experience with new technologies is that people don't go out and want that as a technology. They want the benefits of the technology. So similarly, I think it's about providing a great service. And as for us in particular, the average letter of credit is for $750,000 at the bigger banks. That's just been a very difficult process for some of the small and medium businesses that deal with their freight forwarders or deal with their cross-border payment providers. And so by making it a compelling value proposition, you can, I think, use new technologies in the background of it. And, obviously you have all the same requirements in terms of making sure that it's secure, making sure they understand how it's being used. But I think as much as possible, you just want to make sure that that's built into your value proposition.
Yeah, I would say it's actually easy because we are open source and everything's out in the open and it's tested in the public test net. There are 1,000 people using it. There are thousands of people who try to break in and we fix it. So from that point of view, I think the big enterprise have no problem trusting the technology itself. In terms of company, I think that's a different story, right? So, but I think if we want to address the kind of private chain application of our company, then I think we do need to have a longer kind of period of the engagement and really build the POCs and on top of that to prove that the company can deliver on top of the open source platform.
But can I ask a follow-up? Right. Because you're a public chain project, right?
Right.
So how are enterprises looking at public chains and evaluating like public chain versus just, oh, well, I can just use IBM Hyperledger?
I think there's different things. I think one of the things is Hyperledger is based on one particular type of algorithm. So they might scale in terms of the TPS, transaction per second, but it might not scale in another dimension, like in terms of nodes. So that's one dimension. The other one is they look at the public chain as one validation point, right? So it's really the way that you can vet out all the bugs and also attract a larger community that's actually already active. So I think that's attractive for them as well.
As an observer of the space with the institutions, what I've seen is that it's not necessarily the use cases that have the largest implications that get them excited that they start to validate. It's the ones with the least amount of friction for implementation. So where you either have a low use case such as KYC or AML within banking institutions rather than trying to put bonds on the blockchain, I think they're going to move to AML, KYC earlier. Or you have an institution that has a really large reach up and down their value chain where they can provide and implement that service up and down. I think we saw it with Walmart when they started to do the test case for produce. They had a really good control over their entire value chain, and they were able to implement that really easily because this technology is not like software as a service with other kinds of technology where you sell to one person and they get the full value, and you sell to another person and they get the full value, which may not be true necessarily with your use cases. But a lot of times you need to get all these people on board in order to have a network effect for the value that's being created. So where there's easy implementations around creating that network effect, I think is where a lot of the institutions get excited.
So Jack, you work with special economic zones. Where are you going to find these customers? Like, whether it's physically or where, meaning like what's their psychographic? You kind of talked a little bit about it, but like, how are you finding these end users?
Yeah, so initially our users are governments, and governments are really excited about what this technology can bring. However, they're not positioned well to capture the future value that this technology has. So the first is getting them on board to create an environment where we can get the players involved. And then it's about bringing in the early users that are looking to test the boundaries in a responsible way. There was a great discussion about initial coin offerings and STOs and best practices earlier. And the type of end user we're trying to find initially are those that, even if it were the wild, wild west, they would operate with a really high level of integrity. For us, it's just a lot of networking. They're out there, but they're few and far between. A lot of times with the crypto winter right now, they're actually easier to find because having you guys here with such a down market means that you're truly interested in the implications of this technology. So it's a little easier to find now than it was 6 months ago because everyone's being a little bit more responsible.
What about the rest of you? I mean, how are you doing customer discovery and finding them?
Yeah, I think for us, we have 3 categories of customers. So we say to B, to C, to D, because we are more like a Linux, right? So you have to be able to find a particular case in different applications. So to the business side, so we're mostly working with the carriers, the mobile carriers or internet service providers. So these are the companies we have been addressing to solve their problems such as roaming and billing and settlement, and also in terms of how to share the bandwidth among the different carriers. So that's one way. And the other way is, but that's when the mobile carriers are extremely slow. So they are glacial. So the sales cycle will be 2 years and beyond. So we cannot survive that long. So at the meantime, we look at the 2D, the developers. So we're really looking at the application developers who need peer-to-peer communication. So that's actually much faster. The browser companies, the mobile game applications, and so that will give us the short, medium kind of user adoption. At the end of the day, of course, we want to address the consumer market, but maybe a little bit later. So for example, you can sell home Wi-Fi access point to people so they can actually set up their own kind of network to serve the neighborhood and et cetera. But I think that will probably come a little bit later as well. Yeah.
For us, one of our first areas was really working with industry associations. So for example, there is an association for pharmaceutical companies and a set of regulations around that called the DSCSA. And that basically means that any time from the time that a drug is manufactured until the time that it is dispensed, it has to be tracked. If it's temperature sensitive, that temperature sensitivity has to be recorded and tracked. And all along the way, all of that information needs to be validated so that when the FDA or somebody else comes in and asks you for that data, you can give them the data and give them the proof that you haven't manipulated the data. So that's been one really good way for us. A second one is that we do have developer programs and a free trial available on our website. So we actually started out selling direct to enterprises, and every time you wanted to try anything, you had to call us up. We obviously are now really working from the bottom up as well, so that you can just come to the website, sign up, use the service on test nets for free, and that's been another really good way for us to do that. And the third has really been working with partners. So for example, one of the questions that you asked earlier was, well, how can enterprise trust you? We're an SAP partner, so usually when you trot out the yes, SAP has certified us, yes, they've gone through all the rigorous testing, that's another way that we reach the market is through these partners and so forth.
Yeah, similarly, I think it's in the financial services industry where I come from, I mean, virtually every bank and service provider has a program around that. So I mean, I think there's really been some, lot of testing, but I've been to some of the larger platform providers. I won't name their names, but they're probably 5 or 6, and I think it's been pretty slow adoption. And so folks like us are definitely looking for that leadership from some of the platforms.
Have you guys seen the interest change from users over the last maybe 1 or 2 years? I mean, like a year ago, everybody was like, oh, let's just put blockchain on our name and our stock will double overnight. So now that those days are over, like, is the market being coming up to speed very quickly, or is it just like still pulling teeth?
Yeah, I mean, we've seen some interesting trends. It has gone from last year where people would just approach us because they needed to do quote unquote something with blockchain in order to make their technology teams happy, to really trying to figure out, okay, blockchain, what do I actually do with it? And so for us, we've been seeing more and more things where we're coming in and we're now talking to them about something that's also fairly nascent, which is this notion of data integrity. So if you sort of start reading, there's a growing understanding that not only is the theft of data a real key problem, but also making sure that your data hasn't been altered. And so now we're also on the flip side of a new industry where people are only just now becoming aware of that. And so the nature of our sales have really changed from talking about, you want to do something with blockchain, we make it super easy to do something with blockchain and super inexpensive, to, oh, you have this business problem, let me talk to you about that business problem. Oh, and by the way, we happen to use blockchain. And occasionally we do have to deal with a CTO that the second you say, oh, we happen to use blockchain, freaks out and says, I don't want to touch anything having to do with blockchain. It's terrible. So now we're really seeing that sort of flip side, which is we've had to downplay blockchain more and more in our messaging and more upplay the business thing that we're actually solving for people.
Awesome.
Yeah, I think actually I would say the interest has actually been steady and increasing, because you'll be surprised that crypto is still a very isolated niche. So it's really slowly kind of propagating to the larger audience, and especially with the enterprise, like for example, the mobile carrier space, people are still just warming up the idea. They just warmed up to the artificial intelligence idea. Now they start to ramp up with the blockchain idea. So I don't think it's late or anything. And also I think the good thing about the money influx from last year actually really built all the technology and infrastructure. So we have much better scalability in all dimensions in terms of transaction per second, in terms of number of nodes, like what we do. So the tools are much more advanced and more suitable for the use they have. So I see actually a steady increase of interest from the segments we address.
Awesome. So I'm getting the signal from the back that we're supposed to stop talking soon and start drinking now. So we're gonna have 2 audience questions. If someone wants to take a shot. Any hands? Okay, Jack in the back. His name is Jack.
Thank you all for coming out tonight. My question is about when dealing with enterprises and government regulatory bodies, what processes or tools, methods do you use to both assess and navigate the compliance landscape? I can imagine it's constantly changing, so also what challenges come with navigating it?
Maybe I can start because we had the token sale last year, right? So I think we did consult our legal firms both in the US and Singapore before we do anything, right? So there's lots of different lawyers. So some lawyers want to do nothing, which make your risk is 0%, right? And then there's anything in between 0% to 100%. So if you want to do anything here, you cannot to really do 0%. Basically, you just sit there, do nothing, right? So what we try to do is really to keep our the risk level low, and a little bit like RS audits, right? We want under the radar. So we did it in Australia and Asia. So we very explicitly exclude all the US customers. So we are on the kind of the right side of the SEC, right? So that's very important. So I think in terms of legal and compliance, you just have to find the best legal firms, but also you want to have a business-oriented legal firm that they don't want to reduce the risk to 0, right? But some manageable level.
For us, compliance and regulations have really been our friend. Anything where there's a tax regulation or government regulation around data and things like that are obviously areas that we play in a lot. Where we are finding it interesting, obviously, is the growing acceptance of blockchain in the legal realm. So, for example, blockchain-based evidence is accepted in China. It's accepted in about 9 or 10 states right now in the United States. We just recently had an endorsement from a large accounting firm that endorsed our piece in Europe to be able to be used for that. So, you know, I think that the regulations are growing, and I think the mathematics behind it are becoming more and more possible. So I think that for us it can only be good.
I guess one final word there is, you know, anybody who kind of takes this on as part of their charter, I think compliance and regulation have to be kind of core to all the people involved, and that includes your legal counsel, and I think you have to take it seriously.
And what makes it tough in the United States is a lot of the regulators are taking a wait-and-see approach. They're not taking a stance definitively saying it's this or it's that. So what you can do to put your company in a position to succeed over the long term is try to work with the regulators. And if you're not going to work directly with the regulators, get counsel, get accountants that really know these things, so that even if you end up being incompliant, you can point and say, hey, we didn't know, but we look at all the things we tried to do right. And that ends up giving them the out to say, okay, you may have to dissolve, but you're not legally liable. So do what you can to try to position yourself to be on the right side of the wall, even if it's a gray area.
Yeah. The SEC is finally back at work. So one last question. Yeah. All the way down.
Had to be all the way over there. Thank you. Great panel. It's very, very informative points, so thank you all. Question about scalability. I mean, it's always been a fundamental issue with the blockchain ever since it started. Is like, how are we going to get past the, you know, couple of score of transactions per second, which is just not going to cut it in pretty much every single application out there. So I'd love to know what you all think, like, what are going to be those major solutions to the scalability issue? You know, is it the likes of, you know, a whole new type of DLT like Hashgraph, or is it something else that we haven't yet come across? Like, it feels like something major has to shift in order for this to even become a vaguely viable technology.
I mean, I think for us with the scalability issue, the main thing is that I would take the stance that blockchain doesn't have a scalability issue, it has a use case issue. So blockchain is fairly scalable at what it was designed to do, but people keep trying to misuse blockchain like a general purpose database or a bunch of other tasks for which blockchain wasn't designed. So that's why a lot of companies or organizations like Deloitte are recommending things like, don't put data on the blockchain, put data somewhere else that you know, Amazon, or you know, a database that's scalable and so forth, and then just seal it on the blockchain, or use blockchain for the purposes for which it was intended. Because so far, every time somebody's tried to solve the trilemma, they've broken something. They've broken decentralization, they've broken security. Yes, the problem may be solved, but I think it's much better to look at creative ways of using blockchain together with traditional technologies to solve the scalability problem.
I'm going to have to send you our white paper because we are trying to solve the trilemma.
Yeah, I think, again, because of the influx of the funds, so there's lots of great work has been done. So payment channel is one, right? And off-chain is definitely one of the kind of main things. So you don't store anything that unnecessary on the chain. And the sharding, which is proven and true in a traditional distributed database, that's lots of improvement there. So I don't think that's actually will be a problem. So at least with the technology we have today, I think we can solve more than the users today, right? Because we have a use case problem. So I wouldn't worry about that too much. And another side of the coin is, if you go to a private chain, then you can relax lots of this kind of anti-attack mechanism. Because our CTO Elon is here. So he spent 89% of the time dealing with attacks and the malicious parties. In a permission chain, you don't have that problem. Your scalability can go way high, 10 times, 100 times, 1,000 times. So you can decide whether you want to use a public chain or private chain for your use case.
The other thing to consider is going after a demographic where the scalability fits the state of the development that we're in right now. So I think a lot of use cases are actually going to develop through emerging markets where there's smaller transactions required or there's smaller uses required, and it fits the current state of development while the scalability issues get solved. And then as those issues are resolved, you can kind of bring the technology back into developed markets, tried, tested, and true in a way that has been validated.
I think a lot of the scalability issues may be solved in research, but not in development. Sam, you get the last word.
We do not have a high latency credit card kind of transaction use case. So I think you're right. It's really about fitting the technology for the right use case.
Awesome. Thank you guys to the panelists.
Perfect. Want to thank all of our panelists for tonight and everyone who came out this evening. Really interesting and compelling conversation about the today and the tomorrow of the blockchain landscape. And given the conversation we had tonight, it appears that we need to host another one of these 3 or 4 months from now, and we can have a completely different perspective on where the blockchain landscape is going and that current dynamic. Again, you all should go, you should drink, you should eat, you should chat with our panelists and each other. I want to flag 2 kind of interesting opportunities coming up next week. Cryptowerk, which is one of the GSVlabs companies that was represented here today, is actually having a lunch and learn around their technology and around data management through the blockchain. If that's something that's interesting, you should shoot one of us an email or follow up with the Cryptowerk team, and some more information will be shared. And then finally, next week, when is this, Kate? Wednesday? Next Wednesday, we have a very different conversation going on here. Rather than talking about the emerging technology dynamics of tomorrow, we're talking about the school of the future and how education is being impacted by new technologies that are coming in from the K-12 to the higher ed to the lifelong learning landscape, with some incredible speakers like Pamela Cantor, as well as Jim Shelton, the former Deputy Secretary of Education. So we'd love to see you there as well. Go and sign up on Eventbrite or Splash that now, and hopefully we'll see you back next week. And with that, drink, eat, be merry.